Balwant Singh. This is our group. This is our group member. We are five members in a group. Our group number is four. We are talking about terrace communication, which is the most biggest communication in entire Canada. Let's talk about his company's background. They actually being started in 1990 when the Alberta government decided to privatize its phone service. A few years later, in 1999, they made a big move to merge with the BCTEL. This was the game changer for that specific company. And fast forward today, and the TELUS is everywhere in Canada, and now they provide good service regarding data and wireless services and also Wi-Fi services. They have grown in a nationwide provider that they always trying getting good service to their customers. Please next to the next slide. Industrial, this is my next slide, which is related to industrial landscapes. What is happening in the industry right now? TELUS is not alone in this space. There are many competitors of TELUS like Rogers, Fido, and they are also provide good service to their customer. But there are some cool trends happening, like the 5G. They increase the data speed and also providing more GB to their customers. And the demand for their digital health services is growing too. These trends are divided dividing a lot in innovation. They said TELUS has some challenges. The market and consolidate, meaning there are fewer companies but more competitors. Plus, there are a lot of uh, regulatory changes that make it tough to stay ahead to keep pricing these competition. This now I just take over to my next group member.
So, thank you, Balwant. So, in this slide, we examine the revenue growth trend over the past 3 years. Starting in 2021, there was a notable 9.75% growth in revenue, reaching Canadian 16,838 million. This increase was driven primarily by service expansion. Moving into 2022, the growth rate slightly improved to 9.34%, resulting in a revenue of Canadian 18,412 million as the company strengthened its market presence. However, in 2023, the growth rate slowed to 8.65%, beginning the revenue to Canadian 20,005 million. Despite the declaration, the company continued to see positive growth. So, next slide. So, in this slide, an overview of the fluctuation in net income over the recent years. In 2020, the net income stood at Canadian 1,207 million, a significant increase of 37.12% was observed in 2021, raising the net income to Canadian 1,655 million. However, in 2022, there was a slight decline of 2.42%, beginning the net income to Canadian 1,615 million. In 2023, we experienced a drastic drop, with the net income falling to a negative Canadian 445 million, which represent a decline of 127.55%. This considerable downturn could be attributed to various market challenges and increased cost. Next slide. So here we take a look at the balance sheet overview. Total assets for the company grew to Canadian 56,136 million, with a significant 88.75% of this being non-current asset. So current liability were recorded at Canadian 9,478 million, while non-current liability were much higher at Canadian 29,356 million. The equity stand at Canadian 17,302 million, which make up 30.82% of the total asset. This indicates a strong equity base supporting the company financial stability, the current economic environment. So now I will call to Sukhveer. We'll continue in the next part.
Thank you. Thank you, Harpreet. First, I will talk about key financial ratios. Talents has a current ratio of 0.76, indicating potential short-term liquidity issues. The debt to equity ratio is 2.24, reflecting high leverage. Talents' net profit margin is minus 2.2%, and the return on equity is a minus 2.57%, which is reflecting recent challenges in profitability. Next slide, please. There we will make a comparison with Rousers. Rousers reported a 25.41% revenue growth in 2023, highlighting successful market expansion and strategic execution. This growth shows their ability to capture new market share. Telus also reported revenue growth, but it is very lower, suggesting they may be losing some market share to Rousers. This indicates challenges for Telus in keeping up with their competitor. Next slide, please. Here is a revenue growth, Rouser Communication versus Telus. Rousers saw an impressive 25.41 revenue growth in 2023, reflecting their strong market positioning. In contrast, Telus's revenue growth was lower, suggesting Rousers is gaining market share, and Telus may face challenges in staying competitive. Now, Sukhvinder Kaur present the further presentation.
Thank you, Sukhveer. My name is Sukhvinder Kaur Sekhon, and I'm going to talk about the next 3 slides. And let me explain about the cost management. And in this, I will comparison between the Rogers communication and the Thales communication in the simple terms. First, Roger communication is on the rank first. This means they are better at controlling their costs like employee salaries, bills, and other everyday expenses. By managing these costs well, they can make more profit and grow faster. Next, we have operating expenses. This just means a regular cost of running a business. And also, Rogers doing a good job of keeping these under control, which is why they are in the top. And the final, I want to talk about the Thales communication. In this, they suggest they may have higher costs or they are not managing them as efficiently as the Rogers, which could be slowing their growth. In short, if we want to be explain, Rogers is doing a good job of handling their spending, which is helping them grow faster as comparison to the Thales. Next slide. Now we are looking at the quick comparison between the two companies, Thales and Rogers, the profitability analysis. In this, we can reported a net loss of Canadian $983 million, meaning they spent more than they earned. Their earnings per share, which show how much profit each share makes, dropped by 51%, which means shareholders are earning less this year. On the other hand, Rogers is assumed to be profitable, meaning they are still making a profit, and their operating profitability is stable. This suggests Rogers doing better financially as comparison to the Thales at this moment. Next slide. Now let's focus on the interest, expenses, and debit for both Rogers Communication and the Thales. Rogers experienced a 34.74% growth in the interest expenses compared to the last year, meaning they are paying a lot more in the interest on this debit. This increases significantly hurt their profitability and even contributed to the TELUS reporting a net loss. On the other hand, TELUS seems to have lower interest expenses, suggesting they manage their debt better. This gives them a stronger balance sheet, which means they are in the better financial position to either they can reinvest in the company or return money to the shareholders. Now I want to call my friend Varinder to continue the next slides.
Thank you, Sukhvinder. I'm talking about the TELUS financial position. TELUS financial position represent concern across several areas. First is liquidity. Is a major issue with the current ratio of 0.67. That means the company may struggle to meet its short-term liabilities. It suggests potential cash flow problems. Next one is solvency is also a concern as a debt in equity ratio stand 2.24, indicating high reliance on debt. While leveraging can enhance return, it also increase risk, especially in tougher economic times. Next one is profitability. Profitability is a mix of, while the gross profit margin 62.33% and the operating profit margin 11.32, that shows some strength, but net profit margin in the minus 2.22 that highlight talents is not currently profitable. This is a reinforcement by negative ROA and ROE that figures that show indicating the company is not generating in returns on the asset or equity. Last one is the efficiency. The asset turnover ratio is 0.36 that reveals underutilizations of asset. That means the singling operation inefficiency or overinvestment. Next one is the area of weakness. That are the poor liquidity. Current ratio below 1 indicate that potential cash flow issues and the difficulties that are difficult to meet the obligations of a company. Next one is a high leverages. That means the high debt ratio show increased financial risk, especially during the economic downturns or a raising interest rate. Uh, Negative profitability. Negative profitability means company is not in a profit margin. ROA and ROE that show the shareholder value limit growth opportunities. Inefficient asset use means कि low assets turnover ratio suggest over investment or operational insufficiency in assets utilizations. Next one is the recommendations, means a need to improving liquidity to through better working capital management and diversing non-course asset, delivering debits, are considering equity financing to reduce reliance on a borrowing, enhancing profitability by controlling cost, growing revenue, and eliminating one-time charges that boost their profitability of talents, optimizing asset utilizations by reassessing capital investment and boosting operational efficiency that also help to tell us to manage their financial positions. Next one, conclusion. In the conclusion, while TELUS gross profit margin is solid, it overall financial health marked by poor liquidity, high leverages, and negative profitable strategic adjustment and ensure long-term stability. Thank you. And these are the reference